Welcome to our second video in our teaching series about information the investment world may not want you to know. This video is for those who are 2, 3, 5 to 15 years from retirement. Should you keep your retirement nest egg in the stock market or not? It may interest you to know the IRS allows a wage earner who is over 59 and a half to do what is called an in-service transfer. This means so long as permitted by your plan, you can roll a portion of your existing 401k balance into an option you deem more safe. Then you can continue to contribute to your 401k and get all available employer matching funds without leaving your current balance at risk. This strategy helps a lot of people sleep better at night. You may have heard from well-meaning advisors that buy and hold is always best. You only have a loss if you sell. They say everything will be fine if you just asset allocate, rebalance, dollar cost average, etc. If you've heard all these things, be sure and watch our video on average versus average. You will be surprised by what you learn. But what is the truth about bear markets? Over the last 103 years, the Dow has had 33 bear markets. A bear market is a decline of 20% or more. So literally every 3 years on average, the Dow experienced a bear with an average decline of 37%, and it lasts an average of 19 months. Look at the chart, it's right here. Here's the Great Depression. 90% for almost 3 years. And here's 2002, almost 40% for just about the same length as the Great Depression. Here is 08, around 55% for 15 to 16 months. The S&P index hasn't fared much better than the Dow. Since 1929, it has experienced 25 bear markets, averaging 10 months, with an average loss of 35%. No one can control the market. You don't know when it's going up or when it's going to go down. For that reason, most people, if given a viable alternative, will take advantage of it and sleep better at night. Be sure to watch our fourth video, The Black Hole of Your Retirement. So just intuitively and logically, if you are 10 or 12 years from retirement, based on these averages, you are going to experience 3 more bear markets. You are not a 30-year-old. You probably can't afford to have market losses like these before you retire because you don't have time to catch up. So the question we are trying to ask is, what should you do with the investments in your 401k rollovers? Should you stay invested and hope you have no negative returns that will affect your future retirement income? Or should you move out of the market and start a defensive and safe strategy to create that future retirement income? During our teaching, we'll show you what a safe strategy looks like. Remember, defense wins ball games. Let's talk about the buy and hold philosophy. Remember, many advisors preach buy and hold, but is this really the best option? From 1896 to 1906, we had 9 years of good growth, followed by 18 years of flat growth, followed by 5 years of great growth, then the Great Depression and 25 years of flat, then 11 years of good growth, followed by 17 years of flat, followed by a run-up that we thought would never end, followed by 12 years that did a little over 2%. So out of all these years under buy and hold, 42 were good years to be in the market and 70 years were bad. But does buy and hold really work when you are 10 or 12 years from retirement? You can look at these numbers and decide. What if you could participate in market gains but be guaranteed no investment losses? Wouldn't that be great? Nobody wants to lose monies. Our strategies enable you to do just that. The definition of increasing your efficiency of money is avoiding losses. The first rule of investing is also the second rule: avoid losses. Do you gamble? Do you believe the market is a form of gambling? We've asked that question for 12 years, and most people say yes. Maybe you do too. But do you really want to continue to gamble in the market before you retire? Or would you want to lock in what you've got and protect it with still potential for growth? The market is doing okay now, but most people think it's doing well because of the Federal Reserve's programs. The alternative to this is to contact us and let us help you become a better steward of your retirement funds. Remember, we want to create a personal retirement income strategy that works like a pension, and that income possibly be higher than you could have gotten if you were in the market. There is no gamble to our strategy. Remember, we don't know who you are, we don't know who's watching these videos, but we are expecting your phone call so that we can teach you through a meeting or through a webinar. Thanks for watching our video.